Hello guys, welcome to my channel. Angie here, and thanks a lot for stopping by. Maybe you've heard about the forex market, but you don't know what exactly goes on there, how it works and all those stuff. Yeah, today's video I'm going to be talking to you about the forex market, how it works, what moves the market, what drives the market, and all of those good stuff. Okay, so if you are interested, just keep watching. So the forex market is an online marketplace where currencies of different countries are being exchanged. So normally in the forex market, you see one currency being paired against the other. The first currency is called the base pair, and the one it's being paired to is called the quote pair. That's the second pair. And normally traders actually look into these currencies or these countries to know how the countries are performing before they are informed as to how to trade. Now, there's a general rule of thumb that if the outlook of a country is positive, the value of the currency will increase over time. And if the outlook of a country is negative economically, then the value of its currency would decrease over time. Yes, and so how would you know if the value of a currency is going to increase or decrease over time? So that is when the fundamental analysis of the forex market comes into play. So with the fundamental analysis, you get to study how the economy of the country is performing so as to get some sort of information, or so as to be informed as to how to trade, whether to trade against that currency of the country or to trade in favor of that currency of the country. And most of this information you can find on the internet. You can find on a lot of forex sites, some of which are Forex Live, Daily Forex, Forex Factory, and a whole lot of just googling it can show you everything that a country or how the country is performing economically. Mostly there are lots of factors that affect how the economic outlook of a country would be, some of which are social, political, even some natural disasters. Yes, but then mainly there are economic factors that affect the forex market. Yeah, so some of the economic factors are inflation, unemployment, interest rates, and a whole lot of others. Yeah, there's more to it when it comes to fundamental analysis. But then for the purpose of this video, I'm going to be explaining how interest rates and inflation affects the forex market. I'm choosing interest rates and inflation because they go hand in hand. Yeah, so I'm sure we all know what inflation is, or kind of has some idea on what inflation is, as the rise in the price of goods and services in a country. So if there is a rise in the price of goods and services in a country, mostly it is caused by a rise in the amount of money circulating in that country at a point in time. So if there is too much money in the country at a point in time, normally the demand exceeds supply. Okay, so the suppliers or the producers would have to increase prices to cater for that excess demand. And so when it happens like that, the value of the currency decreases, because what you used to buy for, let's say, 10 cedis, you can't buy the same thing for the same 10 cedis. You might want to add some money to it, maybe 20 cedis, to buy what you used to buy for 10 cedis. So when it happens like that, normally traders would sell off that currency because the value is going to decrease over time. Yes, so let's say if the US dollar is being paired against the Canadian dollar, USD CAD, if there is a rise in the rate of inflation, which you can find on the internet, as I said earlier, the traders would be informed as to how to trade, in the sense that they know that the inflation is going to cause the value of the currency to decrease over time, and so they are going to sell off the US dollar. So normally if they are selling off the US dollar, then it means they are buying the Canadian dollar simultaneously, and that is how it works in the forex market. So if they sell the USD because of this information they've gotten, then as time goes on, when the value starts decreasing, then they make the profit. So here it's simply about getting that knowledge and acting according to that knowledge. That is when you will get the money. And so when it gets to a point where the inflation rate becomes quite unbearable for the country, or when it becomes very unattractive, the currency or the country becomes unattractive to traders, then the central banks of these countries would have to come in and bring up some policies to help curb that inflation. So some of the policies are monetary policies, and in this case a contractionary monetary policy. So with this monetary policy, they are going to increase the interest rates, and so a lot of people would be discouraged from taking loans or borrowing from the banks, because they know that when the time comes and they have to return that loans, they would have to pay more. So it would discourage people from borrowing, and so the money that's circulating in the country at that time would be less, because a lot of people are not borrowing again, and also a lot of people will be saving more because they will know that they are going to, get some interest on their savings when the time is due. Yes, so the sole aim of all this is to just gain some stability in the economy. Yeah, so this is just the basics, like a very basic explanation of how interest rates and inflation affects the forex markets. There are a whole lot of other factors that affect the markets, and if you are an aspiring forex trader, I would entreat you to be very resourceful and very self-sufficient when it comes to some of these things, because you'd have to read a lot and you'd have to research a lot. Okay, so yeah, that's how it is. With time, I'm sure you get a hang over it and know how other factors actually affect the forex markets. Yeah, basically. So I'll quickly take you to the forex market, shall we?
So guys, this is how the forex market looks like, and I got this chart from tradingview.com. So you can log on to tradingview.com and sign up for free. You can have an account there and start analyzing your charts. There's the forex market, there's the stocks market, the futures market, and the cryptocurrency markets. Yeah, so when you go there, all these markets are there, so you look for which one you'd want to trade or you'd want to look at. And so now in the forex market, basically, and this is the USD card chart as indicated by the black arrow over there. And basically what this chart is saying is that $1 is 1.2519 Canadian dollars as indicated by the red arrow there. So ideally, the US dollar has more value than the Canadian dollars, because you'd have to have 1.2519 to get 1.2519 of the Canadian dollars to get $1. So yeah, the US dollar has more value than the Canadian dollars, and this is primarily because of what the economic outlook of the United States is as compared to that of Canada. Yes, United States has a more positive economic outlook as compared to that of Canada. I think some weeks ago, the Federal Reserve, that's the central bank of the United States, came out and brought up some policies which led to the US getting stronger, because as you can see, from March to June, thereabouts mid-June, as indicated by the yellow arrow over here on the left side, you can see that the USD card was in a decline. The candlesticks, these are called the candlesticks, it was declining. And so up until somewhere early July, we saw the US dollar climbing up. And so, yeah, that's how it is. Mostly the big players are the ones who, I mean, if I say the big players, I mean the banks and the big institutions are those that really trade in big amounts. And so normally, if they can predict that the value of the currency would increase over time, they take a buy order. And so as the value is increasing, they make their profits. And so as a retail trader or normal traders, everyday traders, we also would have to move in the same direction as the big players. And so if they are buying, we are buying. If you are selling, we are selling. And that is when the profits will come. If you are new to this, I'm sure you are probably a little bit confused. But just know that anything that anybody knows, they learned. And with time, if you're serious about learning to trade Forex, I mean, you get a hang over it and you'll be able to also trade the Forex market. Another important aspect of the Forex market is the technical analysis. It's very important. It's as important as the fundamental analysis. And as you can see, I've marked up my chart, and I've done some technical analysis, and I'm not going to go so much into technical analysis. The technical analysis tells you when exactly to trade, but the fundamental analysis gives you a general overview of how an economy of a country is performing. So it's like a confirmation to whether to buy or sell. Yeah, so the technical analysis, you can Google it, and you can get a lot of information about technical analysis. A lot of people actually like talking about technical analysis as compared to fundamental analysis, and I think that they are all important. Yeah, so probably in my next videos I'll be talking about some technical analysis, who knows. So yeah, just stay tuned for that. That's about that.
Yeah, so I've come to the end of my video. I hope you somewhat enjoyed it. And if you don't understand anything, please let me know in the comment section below, and I'll see if I can explain further in my next videos. Yes, so leave a like if you enjoyed it. Also subscribe to my channel and share the video. Let everybody know, and I mean, at least have an idea of what the Forex market is or how it works. Yeah, so see you in my next video. Thanks a lot for watching. Bye.